Buying a home is one of the biggest goals for many families. But the reality is, most people cannot save enough money to pay the entire cost of a house at once. That's exactly where mortgages come in. A mortgage is not something to be afraid of. It's simply a loan that allows you to buy a home today, while paying for it slowly over time. So, how does it actually work? Imagine you found a house worth $200,000. Instead of paying the full amount, you might only need to pay a down payment. Let's say $20,000. The rest, $180,000, is provided by the bank or lender as a mortgage. You then repay that loan little by little, usually over 15 to 30 years. Each monthly payment you make goes partly toward reducing the money you borrowed and partly toward something called interest. Now, interest is one of the most important things to understand. It's the cost of borrowing money. Think of it like rent you pay to the bank for lending you the money. The interest rate might seem small, like 5%, but over many years it can add up to tens of thousands of dollars. That's why people always talk about getting the lowest possible rate. It can save you huge amounts in the long run. Mortgages also come in different types. The most common is a fixed-rate mortgage where your interest rate never changes. This gives you stability because your monthly payment stays the same every year. On the other hand, there's the adjustable-rate mortgage, also known as ARM. With this type, the rate can change after a few years. It might go down, which saves you money, but it can also rise, which makes your payments harder to manage. That's why adjustable-rate mortgages carry more risk, and you need to think carefully before choosing one. Another factor is the loan term. A 15-year mortgage means bigger monthly payments, but you finish paying off the loan much faster, and you save a lot on interest. A 30-year mortgage means smaller monthly payments, but you'll pay much more in interest overall because the loan lasts longer. The choice depends on your income, your savings, and how much flexibility you need. It's also worth remembering that mortgages aren't just about buying a home. They also shape your financial life. A well-chosen mortgage can give you peace of mind and stability, but rushing into the wrong type of loan or not understanding the interest rate can create stress for years. That's why experts recommend comparing multiple lenders, asking questions, and reading the fine print before signing anything. At the end of the day, a mortgage is more than just numbers on paper. It's a tool that makes home ownership possible for ordinary people. It's the bridge that takes you from dreaming about a house to actually living in one. If you plan wisely, budget carefully, and stay consistent with payments, a mortgage will not feel like a burden. Instead, it will feel like the steady path that leads you to